Hello everyone and welcome to the program Business Point on Global Television. I am Samuel Odi. Many thanks for joining us as we tend to have diverse conversations, depth conversation basically about businesses around the world, and we'll be focusing more on Nigeria and as well get you update on what's happening within the crypto world as it's one of the futures of digital currency. But we'll be starting from the home front where the federal government of Nigeria has spent 3.58 billion US dollars servicing its foreign debt in the first 9 months of 2024, representing a 39.77% increase from 2.56 billion spent during the same period of 2023. This is according to the data from Central Bank of Nigeria on international payment statistics. The significant rise in external debt services payments shows the mounting pressure on Nigeria's fiscal balance aimed ongoing economic challenges. Data from the CBN International Payment Statistics revealed that highest monthly debt servicing payments in 2024 occurred in the month of May, amounting to $854.37 million in comparison to the highest monthly expenditure in 2023 was $641.70 million US dollars recorded in the month of July. The sharp constraints in May's figures between the 2 years is around $854.37 million in 2024 versus $221.5 million US dollars in 2023, highlighting the high rising cost of debt obligations as Nigeria battled massively with devaluation of Naira. The CBN showed significant month-on-month change in debt servicing costs, with some months recording sharp increase compared to the previous year. A breakdown of the data received via trends across the 9 months as follows. In January 2024, the debt servicing cost surged by 398.89%, raising to $560.52 million US dollars from $112.35 million in January of 2023. February, however, saw a slight decline of 288.54 million US dollars in 2023 to $283.22 million in 2024 of the same month of February. Moving forward to the month of March recorded a 31.4% drop in payments, falling to $276.17 million from $400.47 million US dollars. In the same period last year, April saw a significant rise of 131.77%, with about $215.20 million US dollars paid in 2024 compared to $92.85 million paid in 2023. The highest debt servicing payments occurred in the month of May 2024 when $854.37 million US dollars was spent, reflecting a 286.52% increase compared to 221.05% rather $221.5 million US dollars, which was made payment in May of 2023. June, on the other hand, saw a 6.5% decline, with $50.82 million paid in 2024, down from $54.36 million paid in the year of 2023. July 2024 recorded a 15.48% reduction, with payments dropping to $542.50 million from the month of July, from $641.70 million US dollars in the month of July 2023. In August, there was another decline of 9.69% as $279.95% was paid compared to $309.96 million in 2023. However, September 2024 saw a 17.49% increment, which with payments raising up to 515.81 million from $439.06 million in the year. The same month of last year, the data raises concern about growing pressure of Nigerians' foreign debt obligations with rising global interest rates and exchange rate fluctuations contributing to a higher cost. This is despite the current administration's instance on focusing more on domestic borrowings from capital banks and capital markets. It also estimated that approximately 30% of Nigeria's external reserve constituted by foreign exchange bank sweeps. Regarding external debt, an agency said external financing obligations through a combination of multilateral lending, syndicates, loans, and potential commercial borrowing will raise servicing from 4.8 billion US dollars in 2024 to 5.2 billion US dollars in the coming year. The anticipated servicing include 2.9 billion of amortized, including a 1.1 billion euro bond payment which is due in the month of September. Now, the small and medium enterprise development agencies and economics have stated that the rise in Nigeria's public debt might create macroeconomic challenges, especially if debt servicing burden continues to grow. The chief executive officer of the Center for Promotion of Public Enterprise, Dr. Mudu Yusuf, explained that situations could lead to a virus cycle, warning that we don't end up in debt trap. He said he thinks he thinks is a need for also be very cautious and watch the rate of growth of the public debt, because it could create macroeconomic challenges, especially if the burden of debt servicing continues to grow. He maintained that there is a need for the government to reduce the exposure of foreign debt because of the number has grown so due to the exchange rate. So looking at this foreign debt, yes, we know a couple of months ago the president made applications to borrow loans to finance education and also agricultural challenges that is actually looming in the country. But the numbers keep getting up, and there should be a way, and the ways are being, put in place, policies are being put in place for Nigerians' debt servicing should be cut short, and Nigeria should generate more funds, given the fact that our official deposit is actually on the rise, meaning we are not producing, and then the Nigerian economy, the Nigerian society itself is not generating enough money to use to run its own affairs. That's why most of the times the leadership of the country tend to go and seek for financial help, that is getting loans from other countries to be able to meet up. But how can we come out from all of this? I think cutting cost of governance have always been said by public affairs analysts that is the best approach. They should apply the Ransai report. If that is applied, Nigerians' form of debt and then cost of governance is actually going to reduce to a minimum, and then those monies would be put into other sectors. This is what a whole lot of Nigerians have advocated for and have argued. So it's still part of what the government is looking into, that is the current administration of President Bola Ahmed Tinubu, and also still on the tax matters, Nigerians are still reacting and saying the taxation is too much, and over 76% of businesses in Nigeria has also reached out to the CBN and talking about the fact that they wouldn't be able to keep up with have shop open and be able to be paying all of the interest rates and the tax that is in line with what the president has sent to the State House. It's still in debate. It hasn't been signed to law yet, but we're hoping that Nigerians are hoping that a whole lot will be done positively to help, revolve and then shut down or cut down most of the taxations that has been, sent to the State House to be signed or passed into law. So moving away from the debt servicing and taxation and all of that, let's have a conversation around Nigerian stock exchange market as it ended on a positive note. In the close of business yesterday, the Nigerian All-Share Index concluded the trading section on a positive note, advancing by 158.44 points to settle at 97,418.83 points. So bringing you up to speed, earlier this week in On Monday, rather, last week, rather, we noticed a whole lot of investors pulled out, and then we saw how the O-share index dipped down. But now it's getting on a bullish run, and then we're seeing positive impacts on those aspects. The upward movement drove the market capitalization to an impressive 59.3 trillion naira, making a 0.16% gain for the trading day that ended on the 13th. That was last night. Yesterday, despite a notable decline in the trading volume, the day's activity revealed subdued trading momentum, with total volume shrinking by a substantial 29%, dropping from 350 million shares in the prior season to 247 million shares exchanged across 8,305 deals. Trading volume: the market experienced a slowdown in trading activities as daily trading volumes contracted by 29%. A total of 247 million shares were added, marking a decline from 350 million shares exchanged in the previous section. And then the market overlook is at a positive note. If the positive momentum in the banking sector persists, or the all-share index could breach the 98,000 mark in the coming season. That means we're looking forward to, before the close of business today, given the fact that we are at 97,000 plus, we are hoping before the close of business today, the mark should get to 98,000 points. This sustained, if this is sustained rally fueled by the upbeat investor segments and the robust of the third quarter financial results across various sectors, this may continue to underpin the market's bullish trajectory. Market's summary was as at earlier today. The market opened this morning at 97,418.83 points. Previously was at 97,260.39 points. The day change was at plus 16%. Year-to-date performance was at plus 30.28%, and then the volume traded was at 247 million shares, and then on a total deal of 8,305. So we'll be going on a quick break, and then when we return back, we'll be having conversations around the NNPC and Dangote Refinery, given the fact that a 10-year deal have been signed between NNPC and Dangote for the NNPC to be able to supply Dangote gas for a period of 10 years to help boost local production. We'll be going on a quick break, and then when we return back, we'll be getting deep into that conversation. Stay with us. This clown is not picking. Many thanks for staying with us, and we sincerely apologize for a bit of rift that happened before while the break was on. So moving on, talking about Nigerian National Petroleum Company and the Dangote refinery. The Nigerian National Petroleum Company Limited has signed a 10-year gas supply agreement with Dangote refineries, making a significant boost for local production and industrial growth in Nigeria. The deal signed at Dangote Group headquarters in Lagos involves NNPC Gas Marketing Limited, a subsidiary of NNPC Limited, supplying 100 million standard cubic feet of natural gas daily to Dangote Refinery in Bejuleki, Lagos State. The supply will last for the initial period of 10 years, with operations to extend accordingly. In a statement by the NNPC spokesperson Olufemi Sonya. So he says under the new agreements, the 50 million cubic feet were supplied on a guaranteed base daily and another 50 million on a flexible agreement. Under the terms of the agreements will be a supply of 100 million standard cubic feet per day, and the briefing firm supply, and the rest 500 million supply, intermediately. Sustainable natural gas supply for the refinery for an initial period of 10 years, with options for renewal and as well as growth. The collaboration is a significant step towards ensuring the operational success of Dangote refinery and enhancing Nigerians' domestic gas utilizations. The crude oil price struggles as well below as the OPEC has conversations about this. Now, there have been a rift between the price of the crude oil in the international markets. But before we get into that, now to help grow local production and as well as development of local refineries, as well as what the Dangote initiative has been about, is to curb out prices. A couple of days ago, the Dangote refinery and Ipman have actually came to an agreement that the price will be sold at the minimum rate, which is at 997 naira instead of 990 naira. That was the original price. So with that now, Nigerians are hoping, since the festive period is at hand, if marketers will be able to, reduce their own price, as so petroleum stations and consumers will get it also at a cheaper price, given the fact that petrol is being sold at different petrol station and different states at different prices. So the NNPC sells at around 1,060 naira, and some other private petroleum companies and then filling station also sell at around 1,116 naira and up to 1,200, depending on where you're located and depending where you are. So with all of this initiative of Dangote getting its product locally and also refining locally Nigerians are hoping to get this product at a really subsidized rate. But on the international scene, the crude oil price struggles below $75 as OPEC lowered demands forecast for the fourth time. Crude oil price have dropped nearly 9% from the early October high of $80.95 per barrel, with the Brent struggling to stay above $75 as OPEC lowers its global oil demand forecast for the fourth time. On October 14th, OPEC lowered its projection for global oil demand growth in 2024, predicting a rise of 1.93 trillion barrels per day, down from the earlier estimated of 2.3 million barrels per day in the previous month. This adjustment likely signaled a shift in the market sentiment, setting the stage for the downward trajectory in the oil price. Brent oil futures, which peaked at $80 per barrel in the month of October, fell to $72 per barrel by the end of the same month. Although crude oil future briefly rallied to $75 per barrel in the early November, pricing soon fell back to 72 range after OPEC issued another downgrade on November the 12th, lowering the demand forecast to 1.82 barrel per day. So looking at all of this now, the fact that we Nigerians are expecting to see the OPEC and then the NNPC to produce or refine around 2.2 million barrels per day, but due to some other refineries not getting ready and all of that, we're witnessing a decline. And then in the foreign markets, which means as we all know, the crude is a foreign commodity which is being sold at with the high trading currency, which is the dollar. It's actually been struggling for the past few months. But with all of these initiatives that have been coming up on a daily basis by the NNPC as well as Dangote Refinery, as Ipman, coming together to meet each other at a leveled ground, I think Nigerians are hoping with all of this there would be a bit of a decline on the current price of petrol in the market and for consumers to be able to purchase this. So the high cost of petrol has actually affected life generally. Transportation has gone up, food items have gone up almost on 100%, some even up to 200% increments in all of these food items. So it's been a challenge, and with all of these current initiatives that we keep witnessing, we're hoping that we would be able to get prices of equipment very, very cheap. And then moving on and staying away from fuel and Dangote and the NNPC, let's have a little bit of conversations around cryptocurrencies, where we witness that the month of November has been a bullish month for coins, and we've been witnessing a significant growth of Bitcoin and every other cryptocurrency, given the fact that the algorithm of Bitcoin is really strong and it has been in existence since the early 2000s. So now we're witnessing the significant growth of Bitcoin. Bitcoin had up to 80,000+, and now we're looking to see that, as it has been projected from January this year, that Bitcoin is at the verge of hitting 100,000. It's going to be hitting a mark of $100,000 by December. And at this month of November, we are witnessing Bitcoin hitting up to $85,000. So that's actually on a bullish run. And then we hope those investors and those that have coins are hoping that it hits that mark. But with the presence of Donald Trump, who is also big on crypto, now they hope, and the crypto world is hoping, that it's going to hit that mark, given the fact that US is a world power and most of these cryptocurrencies are actually thriving well in that economy. My name is Samuel Odi, and that's how we'll be drawing the curtain on today's edition of Business Point. I'll see you again tomorrow as we talk more business. Bye for now.